What's up, everybody? Billy Carson here for Bit of Knowledge. I'm going to be going live with Jackie Elon Braden here very shortly, and she's going to come on and talk about some of the mortgage options that are available to us. I had her on probably a month ago, and we talked about what types of mortgage options were available for people that were in COVID-19 situations or entrepreneurs, because some people were in a position where they were already looking for a property and had nowhere to turn. A lot of lenders had turned off a lot of the financing and things like that. And then some people are entrepreneurs who don't normally report their income the way that an average person would, or they're independent contractors, like they're getting 1099 from another company. And because of that, sometimes it's hard to qualify to buy a house, because of the way your income is reported as well. So she had a couple of great options for some people that I thought was very good, especially the one that requires you to not have to show income tax returns. I really like that one. So, she's since that first time she's come on, she had gotten some people qualified for some mortgages, and which I'm really excited about, especially help, and it's helping right now. So I'm going to bring on Jackie Elon Braden. She's a loan officer. I've known her for quite some time now, and she's loves working and helping people. And she's here now. What's up, Jackie?
Hello, how are you?
All right. Good, good. I see you got the straight hair today, huh?
Yeah, it's Braden.
Yeah, you changed every time I see you got a different hairdo.
I mean, it's all mine though.
Yeah,
Bushy, natural, or straight.
it's all good. It's all good. Looks good on you. Looks nice.
Thank you.
Yeah. So I was just telling the folks here that's following and listening right now, that we had you on here about a month ago talking about the VOE mortgages and lending options for people who, cannot or not really looking to show their income tax returns,
Mhm.
which specifically is the type of loan I'm looking to get for another house. I ain't showing no tax returns. You can forget that. So you want to tell them about some of the programs, how they're developing, how they're changing right now, and where everything's going?
Yes, sure. So, introduce myself. Hello, everybody. Uh, Jackie Braden, I'm the loan officer, but my IG is Jackie.elam, E-L-A-M. And I am a published author. And last time I didn't tell the name of my book. I'm like, I am still selling my book, so I should still tell it.
Hmm.
So it's
Yeah.
Cover Your Child in the Entertainment Industry. And that book covers more than how to get a manager or an agent. It helps you understand how the business works so you can maneuver through it and have a successful experience with your child if they're trying to be actors or models in motion picture industry. I also have jewelry. I forgot to talk about my jewelry collection. If you go to jewelry.myshopify.com, you can order my beautiful pieces. And all of my pieces are inspired by the Giza pyramid. So I have my whole little story behind that on the website. But I am here to talk about the different loan products that I do have. And like you were saying, these loan products are called non-QM. Do you hear echo?
Yeah, I do hear echo.
That's weird.
Yeah, no, it's so strange.
Should we have an echo?
Who knows with Instagram these days? I mean,
Okay, yeah, because I've never heard an
yeah,
echo on a live.
me
Except
neither.
when they were doing the verses.
Yeah.
Okay, so non-QM loan products are non-qualified mortgages, and those mortgages are usually mortgages that do not require full docs. So full docs would be your qualified mortgages. So when you get into these non-QM loans, there's so many different loan products that can help different loan scenarios. Like you said, you want something that doesn't require tax return.
Right. But
Okay.
hold on a second, Jackie. Do
Yes,
you have any earbuds that you can use or no? It just seems like the echo is.
I do.
I turned I
I
turned my
do.
volume down.
Hold on, let me see.
Some of the people are saying that
You can't hear me?
yeah, the sound is really bad.
Okay.
We're gonna see if we can get it straightened out real quick, guys. I really like her loan packages for business people like myself. I don't have to worry about, you know, doing a 4506T, which is where you have to file where the lender has to pull your income tax records directly from the IRS. I don't play those kind of games. So she's got some great lending packages that don't require that. So that's that can help a lot of people. Not just it's not like you're trying to do anything crazy or anything. I mean, it's perfectly legal. It's just that when you're working for yourself or when you're an independent contractor, obviously you want to get the best tax breaks and keep as much money in your pocket as possible. So
How am I supposed to set this up?
we get a little bit more creative and we get really good accountants and things like that when it comes to taxes. But then that means that you're maybe having a lot of write-offs and reporting a lower amount of income. And if that's the case, then you may not qualify for the house that you really want and you really can pay for.
Mm-hmm.
So that's when her lending programs come in handy. Okay, you all plugged in?
Okay, let's see. Is that better?
Way better.
Okay, yeah, that's so weird. I mean, okay, awesome. So like I was saying earlier, right, so these type of loan products, these non-QM products are perfect for people who do not have their full docs, right? Like you said, it's many reasons why people don't want to get their taxes involved in their purchasing power. And just because you write off all of your income, that's not a bad thing. Most business owners want to write off mostly everything. And a lot of times business owners don't even pay themselves. So they don't even have, their own payroll for themselves. They put everything into their business. So why should you guys be penalized for that when we can clearly see that your business is earning enough money to qualify you for a mortgage? So if you go to traditional banks like Wells Fargo, Bank of America, they're not going to have these type of loan products. And because of that, that's why there's a market. There's a market for this. Okay, so I want to talk about a few of these different loan products so you can know like where you may fit if you do not have your full documentation. And when I say full documentation, I'm talking about the last 2 years of tax returns, the last 2 pay stubs, that's what's considered full docs, the last W2, W2s, 1040, stuff like that, but showing a history of having consistency in your earnings, right? Well, we have bank statement programs. I'll speak about bank statement, loan product, asset depletion, as well as debt services coverage ratio, which is another way that you can also qualify. So with the bank statement programs, what we do is you would submit, it could be business or personal. So business or personal bank account statements, and we need all the pages so we can know it's a real statement from front to the end. You don't be cutting it off and you go home and do it on your own spreadsheet. That's not going to work. So you can give me 12 months or you can give me 24 months of those bank statements. And what we do to calculate your income, because again, you don't have a tax return. Maybe you, the business owner, you did not turn in you could have like your profit and loss. Like we don't need to see profit and loss. We don't need to have even a CPA letter for this particular investor. A lot of times you have to have P&L, profit and loss, as well as a CPA letter that could then help with the bank statements. But this particular program and product doesn't require those, which is really good. So what we'll do is we'll take all of the deposits that you made in that business account, and we will only calculate those deposits, not the withdrawals. Okay. So then let's just say we do it 24 months. We'll take the total of all of those months and then divide it by 24. Then that would be the average monthly income that we could use towards your earning power to qualify for whatever loan you're looking for. Now, here's the thing. Because you are a business owner, of course, you have expenses, right? The difference is that on your tax returns, you most likely wrote all of those expenses off. So then sometimes depending on the lender, but sometimes they don't put enough back in for you to qualify. What we do is on an expense ratio. So let's just say you, Billy, you have forbidden knowledge. You are
Yeah.
forbidden knowledge. It's
Right.
not you and 20 other employees. You
No.
are your brand. You are your company, right?
Hmm.
You go do speaking engagements. You do all these different things that
Yeah.
represent your company. Well,
Right.
because you do not have wage earners, you don't pay people a monthly or weekly income. You don't give them W-2s every year. You do 1099. So you hire
Hmm.
independent contractors to work with your company forbidden knowledge. Well, then you would be considered a type 1 business where we would then use an expense ratio of 15%.
Okay.
Okay, so then just for number sakes,
Yeah.
let's just say you make 100,000 a month, right?
Hmm.
So if you make 100,000 a month, okay, that's what we calculated, right? Instead of charging you a 50% expense ratio, which would cut that half and 50, that's 50,000,
Yeah.
we'll charge it as 85. So 85,000 would then be counted as your earnings so that
Okay.
you can qualify for whichever property that you're looking for. You can
Right.
use this for, what is it? You can use it for any type of property purchase. It can be
Hmm.
1 to 4 unit. It could be a condo. You could do it
Wow.
for a second home. You could do it for investment properties.
Oh, wow. That's
Mm-hmm.
great. Somebody had typed a question about what if you have 3 or more employees?
Okay, great. So that's where you start. So we have between type 1 and type 4
Yeah.
expense ratio qualification. So
Hmm.
it ranges from as little as the 15% all the
Yeah.
way to 50%. If you have about 3 or 4, you may fall around type 2, type 3. That person can contact me directly and I'll give
Hmm.
them exactly what that ratio is. But let's just
Yeah.
say you have 10 plus employees. Now you're going to be at the 50% expense ratio. We have to charge you some type of expense. Okay.
Yeah.
But then that's it. I know I
Mm.
do that a lot, but I'm serious. That's it. There's absolutely no other document that we need from you to prove your
Wow.
income.
Nice.
Um, and so that's what's beautiful. It's so beautiful. Like we don't even request the 4506T tax form either.
Mm.
And so,
Nice.
because think about it, if we're saying it's bank statement and we don't
Yeah.
need your tax returns, then why would we request a
Hmm.
4506? Because that's to
Yeah.
confirm your tax returns, and we don't use that either.
Right. Now, what's the debt to income ratio?
Great. Yeah, last time I didn't talk about that. So the DTI for these programs, which is beautiful because they understand a lot of times you are a business owner. So they
Hmm.
do expect you to have a little more debt than the average person.
Yeah.
With the other VOE program, that ratio is 31 over 43%. For
Mm.
these programs, it could be max 50%. So they
Okay.
give you a little wiggle room to have a little more debt. I mean, the more you
Yeah.
make, the more debt you have usually.
Yeah, that's true.
So that's how the bank statement program is. Pretty simple. You just
Yeah.
send me your bank statements. We calculate what that average is divided by 12 months or 24 months. But I must also say, if you have a 720 FICO, you could have an LTV max at 80%. Now, this is where the down payment does play a part. So
Yeah.
anytime you are given a bank, a lender, less income verification, you're going to
Hmm.
pay for it either in the down payment and or in the interest rate. So
Okay.
you can't get everything for free, right? If you give
Yeah.
us very little information, we're going to have to feel a little comfortable by charging you a little more down payment to make sure you don't run off with the loan or do something with the property or just default. We don't want to create loans only for you to default. We have to
Right.
qualify you. So 720 LTV is 80%.
Hmm.
700 FICO will get you at 75% LTV, which means
Hmm.
25% down. And then a 680 FICO for the bank statement program will get you at 70% LTV, which is 30% down.
Right. Okay. That's fair.
Yeah.
I think that's fair enough. I mean,
Yeah.
so if you're coming in, you said 720 or up,
So
it's 20.
720 would be 80%. So that'd be a
Okay.
20% down payment. But the
Hmm.
beautiful thing is you can go up to 4 million.
That's
So
great.
where else can you go and get a $4 million house or $3 million house and all you provided was 24 months of bank statements?
Yeah, that's a great lender. Make sure you keep that investor in your back pocket.
Right. No, that's us. That's coming through us. So yeah,
Mm.
absolutely. We're
Yeah.
not getting rid of this product for sure.
Okay. Great. That's fantastic. So, going back to the credit. Now, sometimes on credit, some people could have a high score, but their trade lines are very low. In other words, their high usage credit could be only $5,000 or $10,000, depending on the card. Is there any requirement for the actual max use, the high limit, I should say, of any particular primary trade lines?
Okay, so that's a great question. No matter the trade line, you honestly should keep your utilization at 30%, period.
Right.
And you should never, and this is what I've been talking to some of my clients this past week, never pay it down to zero. You have to understand credit. Credit is for you to use. That's why they want you at a certain utilization to max out what your credit scores would be. But if you pay it off every month, I mean, to say like if it's always at a zero, there's no utilization. So
Right.
leave $50 on, leave $100 on, especially when you're trying to purchase a
Mm-hmm.
home, because you will get the most scores, points, by having some type of utilization. Now,
Right.
there is no limit to your credit line, other than whatever that credit line is, you want to keep it at 30% utilization or lower. I mean,
Mm-hmm. Okay.
outside of that, we don't. Now, if you have collections,
Mm-hmm.
that's what stands out to us. So when I pull your credit report, I'm not looking, okay, I see this line is 50,000, but this line is only 5,000.
Right.
And you're only using, or you're using, only, 200 of it. We don't look at
Yeah.
it like that. What we're looking at is, what are the scores coming in at? And do you have anything derogatory on your credit reporting? Okay.
Yeah.
So then if there's anything negative that's reporting, sometimes it's just a matter of you giving us a letter of explanation. Explain
Right.
to us, what
Yeah.
is this? What is
Right.
this debt? Because sometimes things happen. Um,
Yeah.
Sometimes we have moments in our credit reporting that life happened. You could have gotten a divorce. Something could have happened. You could have had a foreclosure or bankruptcy, but that could have been outside of the season time. And with these
Yeah.
non-QMs, it will take a foreclosure that's less than 7 years with this non-QM. If
Wow.
you've had a bankruptcy, I believe we will do a minimum of 2 or 3 years. It doesn't have to be, 5, 7, 6 years like most traditional lending
Yeah.
products out there. So
Wow.
we make exceptions for certain things like that. So as
Yeah.
far as your credit is concerned, if you have collections, and say it's
Mm-hmm.
$500 and you just had that collection put on 6 months ago. Well, we
Yeah.
might say at underwriting, you know what? Pay that off,
Yeah.
because
It only makes sense.
it's like for 4 or 5 years ago, that's different. If it's a collection, it's 4 or 5 years ago, something happened in your life, we're not going to
Yeah.
hold you to that. But if it's
Mm-hmm.
something so recent and you want us to base it on your ability to pay us, I want
Yeah.
you to pay the 500. It's kind of
True.
like showing good faith. So sometimes they'll ask for a letter of explanation, and
Mm-hmm.
sometimes they'll ask you to pay off a debt that is more recent
Mm-hmm.
to us determining, if you should be approved for this loan.
It makes a lot of sense to me. Wow, this is really, really good stuff. And so you're saying up to $4 million.
Mm-hmm.
What's the minimum amount somebody can get in terms of the lending amount?
So with this non-QM product, it could be as low as 100,000 actually for this.
Okay. Wow.
100,000 up to 4 million. Now that's the bank
Wow.
statement program. Now I'll tell you about the asset depletion program. So let's just say somebody is rich in assets. They have a lot of, not everybody is liquid. Not everybody have the money flowing into their bank account. So
Right.
perhaps you have all your money in a mutual fund, or it's
Mm-hmm.
in stock bonds, or it's in any type of anything of that nature. We don't do boats, we won't do art or anything like that, but
Okay.
any cash value asset, what we'll do to qualify you, if you don't have the full docs that you need, the tax returns, we'll take all of your cash value assets,
Mm-hmm.
and we will will calculate that. And so as long as it is 110% above the loan amount that you are trying to get, right? So let's just say, for instance, if your loan amount is 400,000, right?
Right.
You will multiply 110%, and that'll come out to 440,000.
Right.
Now, that means that your cash value assets need to be at 440,000 or higher to then qualify you for the loan that you're trying to apply for. And that's how we base your monthly income. So let's just say if you make 650,000 a year, we would take 650,000, we would divide that by 60 months, and then that would be your average monthly.
Okay.
And that's how then we can calculate and say, okay, so we'll charge you 10,800, I think $800 something per month. This is your qualifying income to now qualify you for it. Now, if you are running into a problem with your DTI with the asset depletion, then you would give us more of your assets to then offset the DTI, your debt to income ratio.
Right. Okay. I see. That's interesting. Okay. And this program, just for the people who are maybe following and listening right now, is not just for a primary residence, but you can actually utilize it for a secondary residence or a rental property.
Let's see. And I believe that one can also be, and you can even cash out. So let's say you already have a property, and however you qualify to get your homes prior, maybe you no longer earn your money that way. So the bank statement program, the asset depletion, the even the investor debt services coverage ratio could be used for cashing out. So that's
Nice.
also, so people aren't stuck. Like, you know, sometimes their situation change when they get into their homes, but as long as there are different type of lending scenarios that could help the borrower, then it's good to have a lender like me. I'm the money, I'm the bank that can figure out where do you fit, and then I'll put you with the right product. Do you have any questions about the asset depletion? You pretty understand how that works with the cash value?
Yeah, I mean, I got that down pat. That's really good. I'm just thinking now, and that one also can be used for like a multifamily home.
Single family resident. You want to do 1 to 4? Yep, 1 to 4 units. Condo, same thing. It's all the same thing. Up to 4 million. Even the investor debt services. I can explain that to you a little bit. So basically, and the same thing is the typical, because you're doing these programs that are not requiring a lot of income documentation to prove what you earn. So you can pretty much average, you're going to put 20%, maybe 25, maybe 30% on average for each one of these programs. Now for the investor debt service coverage ratio, that's what it's called. This is beautiful. I love this one. Okay. Now this one, of course, you have to have the FICO scores to get these products. So this one, FICO can be 720, and that would be, now the down payment is going to be higher, okay? Because now what we're doing is we're not even asking any income from you. So you, Billy, what we're going to do is, say you came to me, you said, I have this property worth $1 million or whatever. Let's just say $1 million. But I don't want to use any of my income, nothing I earned. I don't want to give you anything. And I'm like, okay, so you don't want to give me anything, but you have the FICO. I know you can qualify and pay for it, but what I'll do for you is the property that you just gave me, that you want to qualify to get for this property, I will take that loan amount, all right? So what we do is we take the loan amount for the property that you're currently trying to purchase. We multiply that by 115%. So as long as it's 115% greater than what that gross net monthly rent would be, then you will qualify for it. So it's the property is qualifying itself to get the loan, basically. So let's just say if, for instance, you're collecting $2,200 a month. You can collect $2,200. The property that you're currently trying to purchase could be empty. It could not already have a tenant in it. So it could be empty, and if it's empty, then we'll need a 1007, which is like a rent addendum that we will have you fill out or whatever, or we will fill out. So that would then tell us what the market rent is going for that property type. and we'll use what the market rent is going for to determine how much you could actually earn if you were to take over this property. And as long as that rent amount will pay for the loan amount, and it's 115% over that loan amount or greater, then that property qualifies itself for the loan.
Wow.
That's pretty cool.
Yeah,
I
that's
hope that
pretty
makes
cool.
sense. Should I give
Yeah,
y'all
I didn't
numbers?
hear about that one. Wow.
Yeah.
That's a great program. You know, I'm thinking I got all kind of things in my, I speculate on real estate and have done speculating on real estate for a long time. And at the height of my reign in real estate before the 2008 collapse, at one point I had over 300 properties nationwide, combination of houses already built, multifamily units, lots, empty land, and pre-construction, combination of all those. And, obviously before it was phenomenal. We were doing very, very big numbers, but these kind of programs are really come in handy back then for a lot of people that are looking to speculate on real estate and just do quick flips or, well, that's another good question. So let's say I buy a property, it's multifamily, I'm renting it out, and 60 days later I decide, you know what, somebody made me a good offer, or there's some good equity in this property, I want to get out of it. What's the, what can I do there?
So that's called a prepayment penalty, and you want to stay away from that. I mean, unless it's worth the deal. I mean, unless it's worth it, and perhaps you have a lot of equity and you want to take the hit. So that would be called a prepayment penalty. Now, I personally try to keep my clients away from it as long as possible, at least a minimum of 6 months. And like I said before, the reason is because there's a cause and effect for everything. So if you quickly turn that thing over in 60 days, everybody got to give back their money. I got to give back my commission. The bank got to give back what they earned. Everybody, it reverses everything that took place to get that loan. Now it is and you're going to pay hefty though for that, especially if you're doing it 2 months in after getting that property. I would always say you go, the 6 months is a safe place to try to get out of a property or to flip it or to sell it, and even push it to a year. But these qualified mortgages, these products actually have a 3-year prepayment penalty. So I'm glad you asked me that. So that lets you know that if you're going to go into using these type of products, put in mind that you at least want to keep the property for 3 years minimum. But the great thing about these products is that there is no limit. You, the investor, you, Billy, you go buy your home with one loan product, then turn around and go buy that investment property with the asset depletion. That frees you from having, I mean, of course, that loan, it's qualified, it is still yours, but it gives you options on different loan products to build up your real estate portfolio again. It's not just one way and only this way.
Right. So I can run 2 loan products concurrently?
Yeah.
Oh, that's incredible. Woo,
and there is no limit. Like, you have some lenders will limit you, like, oh, you can only have 3 properties, or you can only do 5. And with these particular products, say for instance, if you have someone that's following you, they want to be an investor, but they've never owned. Most lenders would say, okay, wait, you don't own a primary home. You don't already have an investment property. So how do you know how to have an investment property? We're not going to lend to you because you haven't shown us your ability to get an investment property. But with these products, you can be a first-time investor. You can, you can get an investment property and not have a primary home. You can get an investment property and it be your first investment property, so I like the non-QM products because it takes away all of the rules that TRID put in place. Yeah.
Wow, that's fantastic. These are some great products. I think that there's a lot of people out there that can use them. Some people, I'm following Forbidden Knowledge. Why is he talking about mortgages and loans? Well, guys, right now, currently today, we're living in this matrix. This version of the matrix requires us mostly, unless you have liquid cash to buy a property, most people get a mortgage. And it's good to know the different types of options that are available to get a mortgage versus the old-fashioned way of, giving out your tax returns and your DNA samples.
Your firstborn.
Listen, I went through a mortgage one time. Like every time I gave them something,
They
they
asked for
asked me
something
for
else.
something else. And they kept asking me. And I was going, okay, this is it. There's nothing you could possibly ask for now. And it was more and more. And it persisted for like 2 months.
Oh.
And I was just like, guys, I have nothing left but blood. There's nothing left that you can actually take from me. You know what I'm saying? I mean, are you going to do a deal or are you not going to do the deal?
Right.
You know? I told the underwriter, like, straight up.
Yeah.
Yeah, I ended up getting the deal, but wow, you know, it was stressful too.
Yeah.
You know?
Yeah. So that's,
Yeah.
I mean, and that depends on your LO, that depends on your loan officer, that depends
Mm-hmm.
on, like my processor is in-house, my underwriters are in-house.
Mm-hmm.
I like to know a little bit about everything. So I'm thinking like the processor, I'm thinking like the underwriter. So when I'm gathering your product, your loan
Mm-hmm.
application, I'm going to ask you for every possible thing that I think that my processor is going to ask for, as well as my underwriter. So because of that, I kind of get my loans to go through smoothly. Yeah, there's no reason why you have to keep going back.
Yeah.
Makes
Goodness,
no
it's
sense.
crazy.
But
Wow.
other than that, I mean, now I can say the debt services, you are going to put a bigger down payment. I didn't say that. So,
Yeah.
like if you're at a 720 FICO, you're still going to have to put 45% down. So, like those are the larger chunks. But the reason is because with that program, we didn't even ask you for bank statements. We let the
Yeah.
property qualify for the
Mm-hmm.
loan. And so
Yeah.
the more money you put into a property, the less the bank feel like you're a risk to them
Mm-hmm.
and you would default. So
Right.
that's how you look at lending. If you were a bank, you have to ask yourself, would I lend to this person and all I know about them is this or that,
Mm-hmm.
you know?
Right.
And
Right.
that's
No,
how
it
they
makes
look at
sense.
it.
Yeah. Now you can say you can cash out. So that's great because, for example, with this whole COVID-19 situation, a lot of people who lost their jobs or were laid off or furloughed, if they had a house with some equity, they were
Right.
able to cash out and live off of the equity during this whole COVID-19 thing these last 3 months and not have to worry about where's my next meal going to come from or am I going to get this $1,200 check. So for the people that's listening, sometimes you have to understand you got to know how to play in this financial matrix, and investing your money into a property can really have a lot of alternative benefits that you may not have thought about. Like, for example, HELOC loans or equity lines of credit so that you can invest into your own business, so that you can, maybe even use that money to buy another property that you can rent out to somebody, use that rent to help cover your mortgage and a profit. There's all kind of ways to maneuver once you have equity in real estate. But the hardest part for most people is actually getting into the actual line of credit or loan. And that's where Jackie comes in.
And our next interview, I can tell you about a blessing. I love this loan product. It's called All in One. And
Mm.
that one is a line of credit, and it actually is structured and meant to help the homeowner actually pay their home off in 5, 7, 10 years. So
Wow.
they modeled this loan product after how I think Australians do it. Like not everybody pay interest first. In America, when we have a loan for 30 years, the first 15 years is interest. You know, I
Mm-hmm.
mean, yeah, you're paying a little bit of that principal, but you really see the chunks of the principal drop off many, many years later.
Mm.
Whereas this all-in-one product is actually flipped. You're actually paying principal first.
Wow.
So that's another one. We'll
Oh,
do
that's
that
a
one because
great one.
that's a good
Wow.
one. That we have to have really good credit for. And
Yeah.
typically you want to have extra money coming in because it's better for people who are not living check to check, that actually have
Okay.
extra income that they can deposit. And that's also a HELOC. So what I
Mm.
love about it is brief, and then we'll talk about it later.
Yeah.
You know how you have to wait, which I do not agree with. And I love this product because it takes away our traditional way of cashing out. So
Mm-hmm.
traditionally, you build up your equity in your house over, time because maybe they began to build in your neighborhood and also your principal is being paid down, right?
Mm-hmm.
Well, with the all-in-one product, every time you're making these deposits into this account that's tied to
Mm-hmm.
your mortgage, that is now available to you. It's a line of
Wow.
credit. So
Wow.
once you've paid your house off in 5-7 years, you don't have to go refinance to then cash out and pull your own money. Or
Yeah.
as you're making the payment and it's paying down, that
Mm-hmm.
money difference that's yours, because that's equity, you can get
Yeah.
right then and there. You don't have to
Wow.
refinance. That's why it's
Beautiful.
called the all-in-one. So it's so many different products today that
Yeah.
that's why I love that I work with a direct lender. I couldn't have
Mm-hmm.
all these different products if I worked for Bank of America or Wells
Yeah.
Fargo, traditional banking, with their
Yeah.
products and their limited lending
Yeah.
resources. So
Right.
having the opportunity to help anybody in almost every scenario, I love.
Yeah. That's phenomenal. I mean, these are some great products. I already know that some people that saw our episode on ForbiddenKnowledge.tv contacted you, and that you've been working with some of them already. They're very happy.
Yes.
Talk to two of those people because I know them personally. And I think you have some great products that can really help a lot of people in alternative ways, because I'm all about breaking the matrix code. I'm not about, you already know what I'm about. I'm not
Yeah.
about following that same old traditional path. I like to bend the matrix to my will.
Mm-hmm.
And I think that you have the products that can allow people to do that and find a way to get into a house, get into a property that they can rent out and generate some rental revenue from, create a rent roll. There's just so many things you can do. Now you're telling me that you can cash out. You can get this other special type of line of credit where you're paying your mortgage and that money's coming available. You can use that money to fund
It's available right then and there. That's called
your
all-in-one loan
businesses and
product.
everything.
Right.
This is great
And
because I'm
that's
also in
what it's
business.
designed for. It's designed
Yeah.
for you to not have to wait. Why do we have to wait until, and when you do cash out, you have to
Mm-hmm.
qualify. Even though
Yeah.
that's your equity, that you've had this property for 10, 15 years, you've built up all this equity in your property, you have to
Mm-hmm.
qualify to pull out your own. To me, that's your money you've earned.
Yeah.
And if you do not qualify or for that additional loan payment, then you
Mm-hmm.
cannot access your own equity unless you sell your property. And so
Right.
we have an alternative to that, which is the all-in-one product.
Mm-hmm. Phenomenal. I love it. I can't wait to talk a lot more about that one
Yeah, we'll do
next
that
time.
one. So you didn't
Yeah,
know I had
yeah.
all these products that fit
I didn't know about
you.
that. I didn't know about that one. I mean, I'm looking forward to building up my real estate portfolio again and getting more diversified. Once again, I'm even looking at some properties right now, even in Jamaica. So, but tell everybody where they can find you.
Yes, sure. I realized I just give you one website and you can find me everywhere else. So if you go
Great.
to Jackie Elam, JackieElam for Mary.com, it will lead you to my jewelry website, my jewelry collection. It will show you my services, what I could do for you. And yeah, and then also at the bottom, you can go to my social media, and IG is Jackie.Elam. But yeah, I mean, you guys can hit me up in the DMs. I mean, so far, when I do these interviews, people, oh my gosh, you have the best people that follow you. I must say,
Thank
everybody
you.
that I've talked to, they're beautiful souls. And I
Thank
see
you.
why they
Thank
follow you. They they're like the teacher, I guess. But
you.
no, they're beautiful souls.
Yeah.
We appreciate one another,
Mm-hmm.
and
Yeah.
I'm completely honest with them. And I don't know, like, I have one client right now. She's so lovely, but I'm
Mm-hmm.
so honest. I like to teach my clients this product. Whatever product you're getting into, you're not gonna just be signing on the dotted line and then you don't realize what you signed. Like, to me, that makes no
Right.
sense. So
Yeah.
I don't. Again, I sat at the table when I was a signing loan agent, and I sat down at the table. In 1 year, I did like 300 loans, and I sat with 300 different families to
Yeah.
hear them complain about their experiences with purchasing or their experiences
Ah.
with their loan officer. So
Mm.
because of that, I was listening and I was taking it all in. And I like to educate, and I feel like I am accessible. And there was a lot of complaints is that they can't reach them, or they don't understand, or they're being told one thing and then it's something else. And so
Mm.
that won't happen with me.
Hey, excellent. Thank you. I really appreciate it. The website is JackieElam.com. I pinned it
Yes.
in comments right here, so you can check it out. Her
And
Instagram is
ask
Jackie.
someone if they have any questions. I mean, I know I talked a lot because I
Yeah.
was trying to
Okay.
get it in. I
No,
know
that's great. Yeah.
IG
Let's
cut
see.
off the time when you do live.
Let's see. Anybody have any questions? Let's see. Let me see what we got in here. Um, I don't see any questions yet. I think
Okay.
they just, yeah, a lot of people are giving a lot of love though. Let me
Okay,
see.
good, good.
I think I did see one. Hold on, I'm scrolling down. Let's see, I saw somebody said can something, but it just appeared so quick. There's so many coming in at once.
So while you're looking, so here's the beautiful thing. So when we talk about that all in one, like this is going to be for your cash heavy people, people
Hmm.
who like say if my expenses are only 3,000 a month, but I earn 10, 15, 20.
Right.
Those are the ones that absolutely fit this all-in-one product because that's how you pay down. I'm going to talk about it now, hell. So that's how you pay down. That's how you pay down that mortgage, right? So
Yeah.
every month we have expenses, right?
Hmm.
Nothing's going to change that. You earn the money that you earn. You put your money into a checking account. You pay your
Yeah.
utilities, your car. You do the same thing. What we
Hmm.
do with this product is we say keep doing that exact same thing. Don't change your lifestyle. Keep doing that exact same thing. But what we're going to do is we're going to take this checking account and it's going to now be associated and connected to your home mortgage. Okay.
Mm.
So let's just say you have a mortgage of 300,000 and
Yeah.
let's just say your expenses again it's like 3,000 a month, but you
Hmm.
earn 10, you earn 12, and maybe it fluctuates. Maybe 1 month
Yeah.
you earn 10, 1 month you earn 12, 1 month you earn 6. As
Yeah.
long as there's a positive deposit that you're able to put into that checking account that's also associated with your mortgage loan,
Hmm.
then that difference, because you didn't change your lifestyle, you still spend 3,000, whether that's on your rent or whether on your mortgage and all of your expenses. You still go out to eat the same way. Don't change your lifestyle, but that difference, what's left over, so that extra 7,000, if you make
Hmm.
12,000 1 month, that
Yeah.
extra 9,000 is actually applied to the principal,
Wow.
and it's still there. It's still there for you because it's also a HELOC line, right? So,
Right.
but it drops down. So in that 1 month where you made your normal mortgage payment, you had that extra cash flow that just dropped down your principal.
The principal amount.
And
Right.
how this country works is you're paying interest on the principal. So in
Mm.
that 1 month, because you had an extra 7,000, you just dropped your 300,000. Let's say on your
Wow.
first payment, you dropped your 300,000 now to 293. Okay, so now we at
Yeah.
293. So for the month that you just made your first payment, you're not paying interest on 300,000. You're paying
Wow.
interest on the 293. So then we go to the second month. So let's say the
And it
second
dropped
month you
again.
have right. So the second month, now the second month, you could have made the same amount or made a little more, made a little more. Whatever that difference is, you have not changed your lifestyle. You paid everything like you normally pay, but now you just dropped it another 7. So that
Mm.
293 is what, 286 or something like that? Yeah,
Yeah.
286. But you just paid interest, and the interest I
Mhm.
think is calculated at the end of the month on the
Mm.
22nd or the 23rd. It's around a 20 something. So by the time you paid all your bills in the beginning of the month, by the
Yeah.
time we're calculating that interest on that remaining principal,
Hmm.
that's how you're paying it off faster. And so
Wow.
a lot of people are paying it off in 5 years, 7 years,
Yeah.
and in all of that equity. So that $300,000 mortgage
Uh-huh.
loan that you have is available. So now it's available to you. So now if you're at 100,000 left on your mortgage, you're 4 or 5 years later, that extra 200,000 that you would have had to refinance,
Uh-huh.
requalify to pay for, you don't have to because it's in your
Yeah.
checking account.
It's
It's
and it's
your
available.
money to pull. So you can go
Wow.
invest into a business. You can go and take that money and get more property. So I
Right.
love that product.
That's phenomenal. We do have a couple of questions. One
Sure.
person says there, what advice do you have to raise your credit score?
Oh yeah, call me. I mean, I don't want to give the game away for free, but I do have a way of helping people depending on where you are, like, and also what's on it. Like, it could be some really negative things that's reporting.
Hmm.
I have a guy that I can refer to them that is like that's what he does, and he's worked with Jay Moore. I don't know if you know Jay Morrison, but he's worked side by side with Jay Morrison. But he's definitely well versed and he has degrees and he's also a realtor, so he's very qualified to
Hmm.
help you prepare you to purchase, and he does it in
Okay.
a quick way because how credit repair companies earn their money is to keep you on retainment, on a monthly retainment. Well, if you're trying to purchase, you got the money, you're ready to roll, you don't want to take 6 months, 9 months, a year later because you're trying to hold me to this monthly payment.
Right.
Because he knows you're trying to purchase a home, he'll actually get it done in a fairly reasonable time because he knows you're trying to purchase. So that's one way. Then I have other ways where you can kind of like help yourself bring up your FICO score.
Okay. Well, they'll be able to contact you through your website. One other question here. What strategies would you suggest for a 680 to 720 credit score for a low down payment?
Are you full docs, or do you need some of these non-QM products where you're not full docs? If you're full docs, then I would say the lowest down payment you could possibly get with full docs is FHA government loan, and that's at 3.5%. And if you're at 680, you're perfect with your FICO score. You're perfect.
Okay, that's great. All right, cool.
What they say?
Yeah.
What state are you in? Okay, I'm in California, but my company is almost nationwide. And I wrote down the states we're not in so I could try to remember. So Massachusetts, Hawaii, Nevada, New York, Ohio, Missouri, Utah, we're not in. But soon we will be in Hawaii, Nevada, Ohio, Missouri, and Utah. So 6 of those, 1, 2, 3, 4, 5. 5 of those we will be in very soon. We're actually prepping to get into those states.
That's fantastic. Now, what if I'm in Florida, so I'm going to close a loan down here. You're in California. How do I get the closing? What do I do? What's going to happen? You send me to a title company or closing agent? What happens?
Yes. So we use notaries. So I can originate, wherever my company is, I can originate a loan. And the great thing about the money side of it is that you don't necessarily even need to see me. Even though I'm the money, I'm helping you get the house and qualify for it. You don't need to physically meet me in person. I have no problem with FaceTiming people, so we could talk. I'm always available to talk. But once I qualify you, the documents are going to be printed out by a licensed notary, and then they will come to you wherever you feel comfortable, either at your home or in public at a Starbucks, wherever you want to meet. You tell them where you want to meet. That notary comes with all the loan docs to then sign. The initial documents I send to you directly, but when we're actually at the end to finalize the loan, you never need to come into the physical bank. The notary will come to you.
Okay, that's great. That's very convenient, really.
Yeah, but that's why you pay for a notary fee too. You'll see, because I was a notary before.
Sure. Yeah, I'm sure. And you have to fill out a 1006 form, or what's the form we got to fill out?
That's the 1003. So
1003.
That's the application. Oh, and that's another thing too. My company, they have many branches, and those branches are basically their own funding branch, which I am now preparing myself to be. For now, I'm a mortgage loan officer, and I actually work at the corporate office. So because I work at the corporate office, we don't have a virtual or a application online for you to fill out. Just call me directly. And I prefer that anyway, because to me, I like to be hands-on. I need you to feel my energy. I want to hear your voice. I want to connect with you. I can't connect with you if you just sent the application through the email and the system just came to me. I want to talk to you. I want to get a feel for what your needs really are. And so if you fill out the application online, I don't get to do that. And then it may go to a pool, with some of the branches, and then whatever loan officer it gets distributed to. But because I'm at the corporate office, I don't have a 1003 online for you to sign, which is good. Just call me. And I'll take the application over the phone.
Nice. Yeah, I'm glad you said that, because those 1003s can be kind of daunting when you see them. First of all, they're like legal plus size paper. The last time I saw one. And the amount of questions, and it's like you just keep going and going. So I'd rather have somebody just ask me the questions and I just tell you the answer and you complete it, because you know exactly. Because sometimes I was questioning, do I need to answer this or do I not? You know what I'm saying? So the 1003s, I mean, oh, I'm so happy. And the front and back pages.
And you don't even have to fill, most of that doesn't even really get filled out. I mean,
yeah,
that's why
great.
I ask the questions, I plug it where it needs to go. And even the beautiful thing about it is once I plug it into my system, I have to create that application anyway, because you have to sign it. So what you basically will end up doing it twice. You'll do it on your own, then to turn around and you have to see it again because you have to sign it. And that's after everything's been verified. So once your income and your assets, if you want to include any assets, I have to put that into my system, which will then generate onto the 1003.
Okay, cool. Wow. This has been a great video, a great live. I appreciate it. Thank you for taking your time to come on here. I think you're going to help a lot of people out there. A lot of people that's following me are, you know, these are regular citizens of the United States and looking for properties and looking to add to their real estate portfolio, looking to buy a house. Maybe a lot of first-time home buyers couldn't figure out, hey, how can I don't think I can qualify for a house. So remember, Jackie has a program available to help you build your credit. You can actually learn how to build your credit up and get it right where it needs to be able to qualify for one of these products that she has. She's got multiple products that can fit into specifically who you are and what you do for a living. And I like the products specifically myself that don't require a tax return. Those are the ones that I definitely will be using.
Well, then the all-in-one is not your product because that one is full dollars.
Yeah, that's full dollars. Yeah, I'm not going full dollars. I'm not going that. But I definitely will utilize you for you know, to buy one property probably as a primary and another one as a investment property to create. So I want to start building my rent roll back up. You know, so I definitely will utilize some of these products. I like the way the flexibility of them. And I like the way that it gives a person who actually gets the loan the freedom to be able to continue to maneuver. It doesn't really just lock them down, other than the prepayment thing. You know, other than that, though, you can it really seems like you get some kind of freedom here. And I like the ability to be able to even do cash outs and stuff like that. So it's exciting stuff. So I'm going to save this live video.
Okay.
Yeah, I'm going to save it. Then I'm going to actually have my editor clean it up just a little tiny bit. We'll put it up on YouTube, and I'll give you a copy.
Okay.
It's saved to this Instagram account. I don't know how Instagram is doing everything these days. Every day is something different the way they have this program going. But we will have a copy of this as many places as we possibly can, guys. So you'll be able to go back, listen to it again, play the whole thing from the beginning, and you know, give Jackie a call. Contact Jackie Elam through her website and see if there's anything. If you just have questions, she'll be more than happy to help you with your questions. Why did I bring her on here? Because I'm all about breaking the matrix code. I'm all about maneuvering through this financial matrix to the best of my ability. I'm not a guy that follows the status quo. I don't go the traditional route. To me, tradition is not tradition. It means condition. I like alternative methods, alternative ways of doing things, and she's got the lending sources to do that. So if you're looking to find an alternative way to you know, to get into real estate or to get real estate for yourself, I recommend you contact Jackie Elam.
And I'll also give you my office number, 714-417-9895. And we are not open between the hours of 12 a.m. to about 6 a.m. So
Okay,
just
what's
keep
that
that
number
in mind.
again?
714-417-9895. 714-417-9895. So y'all can call me directly. Just I'm a bank. Don't call me when you know we close, man. That doesn't make sense.
Yeah, exactly.
I don't know. So people do. I don't know why.
I appreciate it. Thank you so much. And
Thank you.
we'll have you on again soon.
Okay, awesome. Thank you.
All right, cool. Bye.